I think it will. It really depends on the flow rate. I mean, the silver strategic stockpile when we went to the Silver Eagle program was 139 million ounces. Based on the petroleum reserve, the strategic petroleum reserve, and looking on a per capita basis, I would guesstimate that we're looking at least 100 million ounces of silver needed for the strategic stockpile. Maybe the 140, maybe 200. I thought the government of the United States probably does not have a number right now, but let's just use that 100 million talking purposes. In that case, yes, it's very safe to say that. And just elaborating a bit, there were some commentators saying, we blow through 50 and away we go. I was a little more circumspect. I said, I think we will struggle around 50 for a while and might have to punch through it another time or two. But once it becomes, not resistance, but a floor, in other words, then we're on our way. And just to add a little further is I actually, being the conservative thinker that I am, in the next report after we'd gone through 50 in my private premium service, said I could see gold pulling back down into, I think I said 38, 50, silver perhaps as low as 45. And, I got some pushback on that, but, my people aren't looking for this thing to fly the moon. Anyway, and I really put a caveat on that after continue to go above 50 and then 60 and then, moving further, I said the further it gets away from 50, the less likely it is to go below that. But it could in the event of a really sharp market sell-off. In other words, a really big 2008 type of event. And in that kind of a situation, I could see silver perhaps going below 50, maybe gold, for the 38 level. So I just want to get that out in the public domain, Charlotte, because you know how the trolls are, and I don't pay much attention to them. But if they understand the bigger picture and what my thinking was behind it, I think it not justifies it, but makes more sense. Well, it's something that I've been saying on and off for, 2 decades or more. And it is that at some point in time, the physical reality will take over the paper paradigm. And once you have a physical need for the metal that cannot be saved or with contract, paper, silver, or cash settlement, then you will see a new market. And that has taken hold a few times along the last 20 years, but it's been very short in duration. It happened in the retail side a few times where retail product was extremely difficult to find, and it was bid up because of, the price mechanism to supply and demand. But it really hadn't happened on what I call the silver market, commercial bar market, the market that all the derivatives are based upon. And that now has taken place, and it continues as we speak. And that's why in my later updates, I've stated that we're still in the price discovery mode. I truly believe that. What the true price of silver is in US dollars, Canadian dollars, I do not know. I think it's north of 100 in US dollar terms, but it could be much higher than that. The market knows more than all of us, but the way the market is acting and reacting to these sharp sell-offs is unlike anything we've seen in the past, other than a very brief window of time from like the last day of December 1979 through the middle of January 21st, 1980. In that time frame, we saw the kind of moves we're seeing now. Certainly, I try to be objective as possible, and there's a lot of things in the geopolitical system I don't like. But as far as the exchange is concerned, I think it gets a bad rap from my perspective. Certainly, there's been, some manipulation. I mean, I wrote a chapter on it in the Silver Manifesto, and I've made a very, very strong case for it. Nonetheless, I think there's a lot of misunderstanding of how the operation actually works and why margin requirements are moved up on both sides. And a lot of time it can be done to, let's say, protect a certain interest group, but not always. In this case, it did shake out a lot of players, and that's the purpose of it, because the reason most of the time, there's almost always exceptions, margins are raised at the CME for silver, for cocoa, for whatever the commodity might be. It's because the exchange, which has the top responsibility for final settlement, is in trouble. There's too much leverage. There's too much, let's say, momentum in one direction or the other, and they need to calm the market down. So I'm really not against it. Someone said on my Twitter, push back on me, which is fine. And I just replied, they will continue to raise margin requirements once, twice, three, four, five, whatever it takes for the market to, let's say, cool off. And of course, that's exactly what happened.
For decades, paper contracts dominated silver trading, masking the underlying scarcity of physical metal. Now, the situation is changing. Commercial bars, industrial reserves, and retail stock are constrained, pushing the market into a price discovery phase. While some commentators exaggerate shortages, evidence shows the real market is responding to tangible demand, from electronics to investment-grade bullion. Historical parallels, like the silver spike of 1980, demonstrate how sudden shifts can occur when physical demand overtakes paper speculation. Investors are advised to distinguish between physical silver and paper derivatives to avoid market illusions and secure long-term value.
Absolutely. A couple things. One is I wrote an open letter to Elon Musk a few years back about the silver situation and why he might want to consider, buying physical silver and or a mining company. As far as Samsung is concerned, I kind of laugh in a way, and it's not funny, but one of our key picks in our more speculative side of the Morgan report was Avino Gold and Silver. And I've known David Wolfen for years. In fact, I knew David Wolfen's dad. And anyway, the point is that Avino had an offtake agreement with Samsung. It's probably at least a decade old, Charlotte. So one of the few, and, it's in their reports. And, David and I would talk about it from time to time, that was a forward-looking electronics firm that understood the significance of silver and securing a direct supply early on. So this one that we're talking about is one that's just, as far as I know, a secondary source that they have added to it. And lastly, on top of that, I've not been there and witnessed it, but these sources are so solid that I am convinced that there are some Chinese that are looking in Peru to secure silver either in doré or concentrate form before it's put on the free market, we'll say. So I think there is more to that than a rumor. Samsung is provable. The going to the silver belt from Chile all the way through Mexico is verifiable. And I think you're going to see it continue because once a large entity, such as, we'll just throw Tesla out there, everybody knows that, and says, I need to secure a good solid silver supply, I'm going to buy a silver mine rather than go through the exchange or refiner. Once that takes place, you'll see, I think, more of it take place. So what I'm suggesting is that Samsung's already done it and is continuing to do so. You might see others emulate that kind of a thing. And also, just to stockpile the raw silver, I mean, that's the product that they all need. And to look ahead and see, we've had a deficit for 5 years, perhaps, and we have a deficit at least going out 5 years in the future. Even with a major recession, there's still so much of a build out in the electronics world, AI and data centers, and need for electricity and even infrastructure repair for a lot of the grid in North America, that you could have a recession and still not slow down the need for silver. And actually, if there's a recession, it'd be a boost to silver primarily because copper mining, which is 27% of the silver market, comes from copper mining. If that's curtailed because of a big recession, you actually tighten the supply of silver, not actually open it. There is truth to it. Yeah, there was an interview. I forget who did it. I give them credit. I think it was Kuna Silver, and definitely that's been verified by two CEOs in the mining business. I trust them both explicitly. They wouldn't lie to me or the public. I mean, they're good guys, and surprisingly, in the second one, there was a bid spread between the current spot price and what this approach was willing to pay, which was substantially above the spot price. And that's what I've always thought. And I never was able to get the exact contract out of David Wolfen. It's private. It's a business deal. but I did allude to the fact that it would be something like the spot price plus 5% based on the average spot price per quarter, something like that. In other words, if I want to secure a deal and make it friendly, I would be paying the bare minimum silver price on an average basis because you can't trade it every day. You're buying a long-term contract, but I'd sweeten the deal. I'd say, okay, if the average price is X, I'm going to pay you X plus 5%. That way, we've got a deal that's going to be locked in for years, a decade or to life of mine or whatever, and both sides are happy. And they gladly pay, an extra 5%. I'm just making up that number. I don't know even if that exists. That's the way I would write the contract. The idea being that I've made a secure investment for the ongoing business activities that I have to maintain. I'm not going to call it nothing burger, but I do think it's overdone. I did speak with Mike Dorenzo, and I know he's popular and unpopular, but I've known Mike from almost day one when I started on the internet with the Morgan Report. And I didn't get a lot of new information out of Mike. But from what I've been able to determine reading what it says, trying to take it as factually as I can, it's overblown. There's already agreements in place with like the big exporters. They're just making sure, China's making sure that they can track and trace basically all the silver flowing out of China. But it is not stopping the flow out of China. And this is what I discussed with Mike. And that is, if I'm XYZ mining in Peru and I ship over my concentrate to be refined in China, which by the way is about 60% of all silver refining, I'm going to get my product back. It's a deal's a deal, and they're not going to mess that up, at least in my strong view. Now, as far as what the outflow is, will it be different than the original contract? Probably not. But if there isn't a licensing agreement with the exporter, there will be one now. And I think it's really just more to get a handle on what the flows are in and out than stopping silver flows to the West. And I want to go one step further. It may be in your question deck. I'm not sure, but people say, well, let's, we'll quit exporting our silver. I mean, I almost had to, throw out my Coke. I was coughing so loud because, first of all, going back into the Silver Eagle program, this sounds off base, but we'll get into it and make a real important point. When the strategic stockpile was used to build the Silver Eagle program, after they ran out of the stockpile, the legislators, when they enacted the Silver Eagle program, said we can only use domestic silver in the production of our U.S. coins. Well, they found out in a big hurry that we don't mine enough silver to even keep up the Silver Eagle program, let alone all of the electronics that passes to the United States of America. It was ludicrous. So they immediately changed the bill and so we could source silver from anywhere we could get it to make the coin program. Well, the coin program on a good year is 40 million ounces, which is a pretty fair amount of a pressed coin from the government. But it pales in comparison to the industrial need of silver of like 500 billion ounces per year. So I laugh because to restrict the amount of silver going out of the United States from domestic production is such a pitifully small amount. We're in the opposite of the driver's seat. We're kind of the beggar saying, please, 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 can I get silver from anywhere? So I just want to set the record straight on that one.
Industrial demand for silver is surging, fueled by technology, AI, electronics, and infrastructure projects. Major corporations, including Samsung, have long-term contracts securing direct silver supply. Mining operations in Peru, Mexico, and Chile are increasingly targeted by global investors seeking to lock in resources. Even in recessionary scenarios, supply from copper-linked silver mining may tighten further, boosting silver's scarcity. These industrial and corporate strategies create a new layer of market pressure. Physical stockpiles and agreements are no longer just commodities. They are strategic assets, shaping global supply chains and challenging traditional trading mechanisms.
Absolutely. I think it will. It really depends on the flow rate. I mean, the silver strategic stockpile when we went to the Silver Eagle program was 139 million ounces. Based on the petroleum reserve, the strategic petroleum reserve, and looking on a per capita basis, I would guesstimate that we're looking at least 100 million ounces of silver needed for the strategic stockpile, maybe the 140, maybe 200. I thought they they, the government of the United States, probably does not have a number right now. But let's just use that 100 million talking purposes. In that case, the average retail purchase of silver on a physical trajectory is about 200 million ounces a year. So if you added 100 million in 1 year, which I think is reasonable, could be 2, could be 5, I don't know, could be 3 months, I don't know. But it was 100 for the year. You're adding about 33% additional physical requirement on top to what's already an average offtake, which of course we're above average in offtake now. Not only North America wise, I'd have to look at the numbers. We don't have them yet, but I suspect here forward 2026 onward, I think there's going to be a lot of retail comes back into the market at 70 and 75, believe it or not, because where else are you going to go as the empire starts to crumble more and more? And, what just took place in Venezuela is an absolute verification of the two books called Resource Wars. So I'll give it back to you, Charlotte. It's kind of a couple things run across my mind. One is the old adage from P.T. Barnum, and most of your viewers probably don't know who that is, but it was, just give me news, good news or bad news. As long as they're talking about you, it's essentially a good thing. So the AI Asia guys certainly, I think, got not only the silver crowd enthused, but a lot of Johnny-come-latelys that are just starting to look into silver, pretty hyped up. And there's a lot of factual information in most of those AI generated missives on the YouTube channels. However, that's not 100% truthful all the way through. One of the main ones that's so easy to verify is what's stated about the Comex being drained, and the Comex is at the lowest level it's been in 20 years. And there's only, I think the number is 35 million ounces of silver in the registered category. All that was true about a year or so ago. I'd have to check my records. But right now, we are at, and I don't have it in front of me, I didn't quite prepare, but it's in my head. I think we're at least 135 million ounces in the registered category. So that's a lot more than 35 million ounces. So that's readily available to be distributed out of the Comex into whomever buys the physical contracts. On top of that, there was an indication on X, and I forget who did it, about what the first notice days were like. And he went into pretty good detail, the truth about what's so often misunderstood about standing for delivery and what actually takes place. And he went through that, but the amount of transfers were rather substantial, but still about 4.5% of that number I just gave you. So the indication from the X posting was that, this is going to drain out, so much silver, it's going to be a hardship. And the reality was they were using the wrong number as far as the amount of registered silver in the Comex. And as I just said, it was less than 5%. So certainly that one. The other thing is how that silver moves around. Now, a lot more in recent years has moved out of the Comex warehouses. In other words, a semi truck pulls up, they load the pallets on there, they bail. They don't really do bailment, but they do a manifest in and out, serial numbers, etc. And it leaves and it goes somewhere. It goes on a boat. A lot of times that shift between owners wasn't movement out of the Comex warehouses. It was a retagging. So some 2 pallets of fine silver would have HSBC on the tag, for example. Those tags would come off and you'd throw on JP Morgan on it. And the silver really didn't move. The location stayed put, the ownership changed. So I want to get that out there as well. But no, there is a big physical demand for silver. It is taking care of the price mechanism. There are disparities between different locations. And I wouldn't say it's a mess. It's very, very intriguing. So I don't want to belittle any of that, which you're bringing to the fore, and thank you for it, Charlotte. But within that context, there's a lot of exaggeration.
Geopolitical tensions are reshaping precious metal markets. Historical events, like the freezing of Russian assets, have triggered increased gold purchasing by central banks worldwide. These institutions are hedging against potential currency devaluation and financial uncertainty. The trend is clear. Gold and silver are seen as universal money, immune to defaults, and geopolitical interference. Investors must recognize the interplay between macroeconomic policy, currency stability, and metal markets. Central banks' accumulation strategies, combined with industrial demand and retail interest, are creating an environment where metals act as both a hedge and a currency alternative in unstable times.
I do think so. I have to laugh about the debasement trade. I mean, the whole premise of the Morgan report really is, monetary instability and that you should be hedged no matter what your likes or dislikes are, investing wise, that it is wise, excuse the pun, to have some physical metal because we're in a situation where we're debasing the currencies and therefore you need to hedge for it. And now, of course, it's become a mainstream term. And I'm answering your question in a long-winded way, but I do believe that people are now waking up to the fact. And when inflation is insidious and you kind of expect things to cost more, maybe that restaurant ups its prices a little bit, or it's a little bit more to park my car. They kind of just blow it off because my computer costs less than it did last time I bought one. And it's a lot better. And my cell phone actually cost a couple $100 less than my last one. It's even better than the last one I owned. So there's kind of this little bit of a balance as long as there's, let's say, inflation where it's at a level where you see other things that kind of replace it, or it doesn't hurt very much. Well, we have not been there for a very long time, at least in the States. And, I still get to Canada from time to time, meaning that most average middle class, whatever, Canadians, Americans, South Americans, whatever, are really feeling the pinch now and noticing. And once that happens, you can't unsee it, as the expression goes. What is causing it? Oh, debasement of the currency. Oh, what do you do about it? Oh, the debasement trade. What does that mean? Oh, it means I better have some sound money just in case this money starts to lose value at a faster clip than it already is. So yes, I do think we are going to see a resurgence of people that have never thought about buying gold or silver, even people that made fun of us, gold bugs, silver bugs, or whatever, saying, ha, 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 I'm in AI, or whatever the investment de jour is, and turn around and say, wait a minute, even my AI stocks aren't doing as well as the silver market. Well, I'm trying to really, this is like the hardest job I have in my own opinion, but, I've been pretty much on the mark all the way up. Certainly I called the tops. Certainly haven't been the best bottom picker. I admit that, but I think the long-term picture I've been as objective and as accurate as anyone. I mean, I don't know how many times I said over the years, and you've known me for years, if you could buy silver long-term under 30, you're going to be very happy. And I think anyone that bought silver US 30 or a Canadian 30 is pretty happy right now. So I think we're going to continue, to see that. So in the cycle, I've said for years, 90% of the move in the last 10% of the time, and I still believe that. We are in the acceleration phase of the cycle. I would argue anyone that we're not. I mean, you look at one of the more prominent analysts in our sector now that does the momentum analysis. He's phenomenal, and he talks about the acceleration phase and a repricing of silver. And he's absolutely correct. And I do think that we could get to 100 or maybe 200 or maybe more. I don't know. The market knows more than any of us. But Michael Oliver really lays it out succinctly and, just a very good student of the markets. And Michael Oliver just goes through why you could see this acceleration that no one expects. So that's it. That doesn't negate my overall thesis, meaning that if we have a 25-year bull market, and we're in the last 10% of the time, that's about 2.5 years. And you want to count the gold breakout at 2000, and I don't have the chart in front of me. Maybe that's the start of it. Maybe we only have a couple years from there. Now, people argue fundamentally, well, David, you're out of your mind. I mean, anyone, the student of silver that you are, should know we've got, at least 10 years to go because of the deficit that won't be solved probably for 10 more years unless there's a huge technological breakthrough of some type where there's a meteorite, pure silver, that's as big as Africa that lands or something. Sorry for my sick humor. But I agree with that analysis based on the status quo. But one of my main themes isn't just, the precious metals. My underlying theme of the Morgan report is money, mining, and markets. And the money equation is, what are we doing with the money, which is a falsehood. Everyone knows it at this point, at least anyone that tunes into INN. And they're going to realize we are looking toward a new system. And the new system exists. It's existed in China for quite some time. And believe it or not, it works quite well. So I do believe that's where we're headed. So because of that strong conjecture on my part and others, I think this market does only have a few years left. And what do we do during the transition? I really don't know. Obviously, we know silver, gold, platinum, copper, lithium, everything that you do at INN, including the energy markets, are extremely valuable. This is what makes the world go round is the energy sector and hardcore commodities. So those won't go away. It's just how will they be repriced in the new system? And that I really do not know.
Market timing is crucial. Long-term investors should approach silver and gold strategically, considering tranches and ratio-based swaps. Silver is currently undervalued relative to its industrial demand and potential price trajectory, while gold provides stability during volatility. Mining equities offer another entry point, with major companies providing steady exposure and junior exploration firms presenting high-risk, high-reward opportunities. Historical trends show the final phase of bull markets can be accelerated, offering outsized returns. Thoughtful portfolio planning, distinguishing between physical and paper assets, and understanding global supply-demand dynamics are essential for investors seeking to protect capital and maximize gains.
Well, the silver equities can really be or used to be the Bitcoin of, the early days when I was in my youth, in my early 20s or whatever. I mean, a penny mining stock could go from 12 cents to $1.20, some even well beyond that. 10 baggers are pretty common in the penny stock world, and 100 baggers weren't unheard of. But where we sit right now is they're undervalued. The mining shares on aggregate, like the XEU and HUI, have outperformed the metal itself, but not by much. I think the silver, the HUI and the XEU are actually about par with the metal itself. But going forward, the best value right now, if you're new, would be to buy the equities. I would still stress the top tier companies and then mid tiers and then maybe junior producers. But there will come a time where the exploration companies do far better than the majors. But you got to be careful how you do it. It's a timing thing more than anything else. And we're not there yet, in my view. If you want to think long term, you can sift through the juniors. We put about 3 on the new report that just got published yesterday or day before. I'm a little winded from every time we finish a report and post it for our members. But we have some ideas for silver, mining shares. But that is the place to catch up. I think you're going to see these stocks get overvalued at some point. They're undervalued right now. They're trading in the majors as if silver is like $35, $40 the ounce when we know it's like pushing toward 80. So the earnings have not been believed by the market or hit the bottom line. I mean, a lot of these silver companies are looking on last quarter's earnings and what they're going to report in their, 10Ks and their financials are going to be different than the current price. But then when another quarter goes by and perhaps the average price for silver is 75 and that number hits the earnings reporting, then a lot of Wall Street's going to say, oh, my, what a value stock these silver companies are. They're really undervalued. Maybe we better buy some. So we're going to see, I think, a lot of money come in out of whatever sector, perhaps AI, I don't know, the general equity market, I'll call it that, and moving into the resource sector. And that's why, INN is kind of one of the forerunners for looking, I would say as a visionary for what really, really matters in the world. It is resource. I don't have any real words of wisdom, Charlotte. Thanks for the first interview. I will be a bit philosophical here at the end. Let everybody know there's things more important in the world than money. But I think that we need to be on our toes and be alert and try to stay calm during what I continue to see as very tenuous times with, what I'm not very proud of with what we're doing here in the United States versus countries that don't agree with us. I do want to repeat one statement that I've said and others. I don't know if I was the first to say it or not. I really don't care. But I think the biggest mistake made over the last decade or more was that the United States basically froze the assets of the U.S. or of Russia during this sanctioning. I really believe that was the shot across the bow, as the expression goes, that woke up a bunch of other countries and said, we can't trust the United States. What if they don't like our politics? What if they take our money from us? And that's really when you started to see the gold purchasing increase for safety from the central banking community globally. And I think that trend will continue. I think that trend will just absolutely continue. And I just want to get that on the record because I think the big picture is always one of the best, one of the foundational reasons to think or rethink what your portfolio position may be, because people think, well, it's too late to buy gold. It's 4,400. But if you think longer term, as far as not price so much, but value, what's the value of not losing much of my portfolio now if gold is that counterweight on the seesaw? That if something goes wrong geopolitically, at least gold will counterbalance it. So thank you for letting me finish with that.
The future of silver and gold markets lies in physical demand, industrial usage, and strategic accumulation. As monetary systems evolve, the importance of tangible assets grows. The current bull cycle may be entering its acceleration phase, offering opportunities but requiring careful analysis. Retail and institutional investors alike must recognize the broader context: geopolitical risks, supply limitations, and global industrial expansion. Precious metals are more than investments. They are tools for safeguarding wealth in a rapidly changing financial world. Strategic allocation, careful timing, and understanding the market's physical realities will define success in this new era.